video. First of all, before jumping in the charts, I want to give a quick shout out to everyone that just joined this month. It's really like a pleasure, the feedback that you guys have given me, like everything you guys are saying about my content. It really motivates me to keep on going. And this is the first time we opened up the group to the public, so it really means a lot that you guys can take something from it. And I really hope you guys will learn something to take into your trading, take into your charts, and start simplifying the way you look at things. I don't know. So let's jump right into the charts, because we have a lot to talk about. Just a quick note, like we are approaching the end of the month. This is the middle of the year. Like it's normal for things to get a little volatile while institutions and corporations are taking out profits, cutting their quarterly earnings, and a lot is happening. It's kind of like a turning point for the market to decide if it wants to keep the same trajectory that it had this half a year until now, or if it wants to reverse, like we just had a little sign on the dollar from last week with this good news and hawkish sentiment from the Fed. We will go over all of this. So we really need now to see where is the dollar going, what does the dollar want to do, so we can get the direction for the next half a year, basically. So taking a look at the 30-year yield of the dollar, we had a bit of a push down last week, nothing major. We're still holding these major support lines. What I want to focus on the dollar is the 10-year yield, because we started last week with a really nice push up, but we ended through Thursday till Friday with this push back down until 1.45, going into what we had in the beginning of the week. And we already pushed below this zone that I had marked and started to push back up. So this is a good sign in my opinion. If we correlate it with the DXY, I really think after this breakout, the DXY wants to keep on and maybe push into 93. The only thing that's keeping me on the back foot right now is this that happened with the 10-year yield. If we could stay above this zone, above this supply zone over here, I would definitely say we are going to 93 on the DXY. But taking into account that we had this slowdown into the end of the week after the hawkish news from the Fed, we really need to take things slow these first 2 days, Monday to Tuesday. So I'm really just looking into the market, seeing how it behaves after such massive moves last week. So the Fed, what did we have from the Fed last week? It really gave us a hawkish feeling, a really good sentiment on the dollar. They really showed confidence on upping the interest rates, because with their intentions of the tapering. The dollar really recovered a lot. Like if we take into account that it was hanging around the 89, 50, 90 level, we had a jump of 2 basis points. So it's really good for the dollar. This type of moves don't happen quite often, so we really need to pay attention, because for example, what we had on Wednesday, the Fed, the FOMC meetings, this thing happens 4 times per year. So it's really something to take into consideration and to let the market breathe and react to this news in order for us to act upon them. So we really had a really bullish day with this 3 days boom, boom, boom on the dollar. The only thing, as I mentioned again, that is keeping me from that bullish push straight into 93 was this slowdown on the 10-year yield. So that's why I'm saying don't rush into any trade right now. We had 400 pip moves, 300 with this pairs against the dollar, and just take time to. We are at the end of the month. We don't want to give profits away. So anything that we might catch, it will be good, but we are not in a rush to find trades or to enter any trade or to be engaging in any trade right now. I'm really just now focusing on what's coming into the next half a year. So taking a look at Euro, for example, we had this complete rejection of psychological level 122.50. These 3 or 4 last weeks, we really had a slowdown, and it was the the second retrace after we made these highs at 23.50. We would quickly rejected this 78.6 throughout 1, 2, 3, 4 weeks. And last week, of course, with this Fed news, we breached the 21 level that we were holding for quite some time, about a month and a half. And yes, now with this is a really huge push to the downside with a lot of momentum. So I do see it coming all the way over to 1.1750. This is of course another psychological level. As we go from 120, 1750, 115, we need to take these levels into consideration. So taking in account that the dollar, and this will go into every pair against the dollar, taking in account that the dollar had this huge move last week and we really ended up with a really bullish weekly candle. We normally at the beginning of these weeks we have the retrace, so normally the price will come back down just to create the weekly wick, and then into Wednesday, Thursday, Friday prices push back up so they can create the wick and end in a bullish form. So what we can expect into the pairs against the dollar with this is that quick retrace up just to grab the short sells at the higher spot. For example, I can throw a Fibonacci here just to check where price might go into. We can still come into 120 just for that step and continuation to the downside. If the dollar does reject that 92 level, we can expect this easily to happen. It might not even come to 120, as that's what everyone should expect. But for example, into this week over here, that we had the push to break these highs, so probably that's an important zone. I didn't have time this weekend to clean up my charts, guys, so I'm sorry for that. I'm sorry for the delay also, that I said I'm gonna post this breakdown yesterday night, and I didn't have time, because I was traveling throughout this weekend, and only yesterday night got home, didn't have time to record anything, and this morning was also chaotic. So here it is. Euro, there's not much that we need to see. What I want to focus on this week is GBP, because we will have a lot of news this week with GBP. Monetary policies, asset purchase facilities, also the final GDP and unemployment for the USD will come out. Like throughout this week, flash PMIs, these things will impact the dollar, the pound. Why? Because last week we had this feeling of the Fed, this reaction to the Fed, and on top of this, of course, we had the Boris Johnson saying that we would delay the opening of the lockdown. It should be opening today in the UK, but they decided to postpone it for another 4 weeks. So that's why it's giving further downside momentum to the pound. I do see it coming all the way to 1.368 just because of this news. And if we do get a stronger dollar, which is what I'm expecting towards this week, if we do get that bullish dollar, I really see the pound just coming into 139, 139.50. Like that's the most I would say it will go, and then midweek starting to reverse. So we will keep an eye on this. The pound is it's still bullish. I mean, we are still in a really bullish trend on the weekly, but I don't feel this move, although it's closed above or at the same level as this candle. I do feel this move as potential to continue. It won't withstand this higher lows, higher highs form. At least with this news that we have right now in our hands. If someone follows the AUD USD, this pair, I don't trade it. I just use it for correlation with GBP AUD and gold. So I do see it coming way further as it has the same feeling with GBP USD or Euro USD. In accordance to this too, these two are still having some sort of support and higher low creation, but AUD USD is just free falling, no further support. So I would say it has all the potential to come to 0.70 long term with this, if we keep on this bullish momentum on the dollar. With GBP AUD, let me reduce this. GBP AUD, I still think this has the potential to keep on going up. We need to see how it will react to this 1.85 psychological level, but I feel it has the strength to keep on going because GBP, as I said, is holding. It might still hold, and the devaluation should be way slower than AUD USD, just based on technical. So I do expect it to breach 1.85, or if we do get some sort of retracement or rejection of 185, because we haven't been above this zone since the 25th of May last year. So it can get a really hard rejection upon this zone, and we can try and take this shorts into 1.8350. I don't know, we have to see how the pound will react this week. Going into GBP JPY, I still keep my bullish sentiment on this pair, just because of how the Japanese yen is performing as well. I do see still GBP JPY coming all the way to 1.55 again, or even 56,500 if we see sterling holding on and not crashing down from that 1.3670 area. If we do hold here and we have some sort of retracement, I do see GBP JPY still keeping this bullish momentum, this bullish structure. This was just a slight breathing room. And with Euro JPY, same old thing. It's not quite the same because of the euro, as we are supposed to reject all the way to 1.1750. But I do see, as we already had this huge rejection of 130 level, and we already at 100 pips up at 131. So if we do get some sort of retracement on this, we are already breaking structure on the lower time frames. If we do get some sort of retracement, I would be looking to enter a long in this pair. Just based out of this, we can get a really good setup over here. Of course, this will have to go in accordance to our technicals as the days progress, but just taking a quick look into what's happening this week, all the pairs need some sort of retrace to recover from all this down move. It was a really huge move, 363 pips. So if the institutions, if they want to keep on taking prices lower, they really need to first accumulate these orders at the higher place possible. For example, at this imbalance over there, like, I'm sorry guys, at this imbalance over here. So it's the 40 level, like, or the 39, like all these levels, the institutions need to take price into these places so they can accumulate the shorts, so then they can take prices lower. They won't just start the week and go straight into that zone. Why? Because you have a lot of retailers that just accumulated shorts, so they won't give them free money. So they have to do the retrace, probably work on their psychology through Monday to Tuesday and do this retrace, and people will be like, oh no, this will retrace, this will take all my money, so I better cut my position, and only then we will see the rollover. So take that into consideration, guys. This week consensus for the dollar is a bit conservative, although we had that bullish push, but GBP, for example, has to show why the lockdown opening was postponed. Why did they take these measures? Because they just said they were gonna postpone it. So until we have these measures, I see just price consolidating a bit. I actually see it happening in most pairs against the dollar, just based on this was really aggressive move, and after expansions, price expanding from point A to point B, it's normal that we have some sort of consolidation. So I do still keep the pound being weak this week, and I want to see a few days of consolidation on the pairs against the dollar. So take that in mind, guys, going into midweek, Wednesday or something like that. Just taking a quick look into the fundamentals. On Wednesday we will have PMIs for basically everything. Yes, only thing that I'm carrying, for example, is tomorrow, Tuesday at 7 p.m. The Fed Chair Powell will testify, probably will give further insight of what they mentioned last week on the FOMC meetings. So this is really something to keep in mind. And as I mentioned, we will have probably this Monday and Tuesday some recovery on the charts, just to then, after tomorrow's New York session, after Tuesday, we will have the Fed Chair Powell speaking. So that might give us that midweek reversal into Wednesday and Thursday, Friday as well. So keep that in mind, guys. Also, I want to mention gold. No, I did say that I wanted to see gold go all the way to 1750, just based on this dollar momentum, but I think it held quite well. Gold above this 1760 level, just because of this end of the week 10-year bond weakness that we had, that I explained earlier. So I'm not touching I'm not touching gold right now. I'm just observing. I want to observe all these pairs coming into this week. How will they react to these huge moves that happened last week? And also we are seeing something happening in crypto. So just a quick note, I didn't want to mix these videos, but you guys told me to. I just want to give you guys some sort of insight to why I think the way I think about crypto. So as a lot of you guys don't know, I'm in crypto since 2017. So I actually started when this shit was around here, like 1,500. So I went through this hype of going into 20k, of spending 2018, 2019, going all the way back down, boom, 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 slow. This is weekly candles. So it was really a psychological warfare in crypto. And even when we got to 6k, they even took it down 50% further into the negative. So all this manipulation, it's really easy to happen in crypto. It's really easy that retail minds get slaughtered just because of their lack of patience, basically. So since we had this huge push from August last year, November, going into November, I warned that we had this breakout, but we literally left no retest on the 12k area, on the 20k area. And although we had a huge push, like, we can't put aside the fact that this just made 427%. So just think about how many people, how many institutions were accumulating on the 3k area, on the 5k, on the 10k, like, and they just made back 4 times their money, 5 times, 10 times their money, 20 times if they bought at 3k. So it's really normal that once we have this huge pushes, we need to start not only counting where, or the value of the price, where is it, like here it was 58, here it was 62, here it was 65. We can't just look at what's the price of the asset. We need to look at what's the momentum, what's the push, what's the sentiment, what is the technical telling me, basically. What do I see looking at this chart? What can I tell about people trading this? So what I'm seeing, and probably you guys don't realize, is that we had this huge push from 12k until 41k, and you can see how this is just like a massive push. We literally didn't stop from 20k. This was the first burst, and we immediately doubled money. So the institutions were all accumulating under 20k, and I still remember, like, if we went to 20k as it was the 2017 max all-time high, like, I would expect this to come. I remember coming at least until 15k, like at least until 16 or 17k, but it didn't. Like, it just stayed between 19k, 20k, just accumulating, and as soon as it shot up, it doubled the institution's money. And they are not putting 1,000 euros there. They are not putting 50,000. They are putting millions and millions and millions. So just imagine the type of power they will have to sell these positions. Because if you are putting 100 euros and you just doubled your money, you won't have that many impact on the market. But we are talking about the retails. The most retails, I will say 70% of retails, they will just dream about the moon. So they will leave their money there until like either it goes to zero or it makes them millionaires. And they can't seem to understand, for example, that after a push like this, with such inclination, with such angle, with such momentum, we should be expecting, like, this was what? This was almost doubling the money again. Like we need to see, like, after such move, what is the type of retrace that we are having. Okay, we didn't even retest that point because the buyers were of course in control. But if the buyers were in control, why did we only get like the same angle of push? And why did we only have a 5% increase from the previous top? So if we normally, when we are on a bullish trend, so we should evaluate the trend by what's the momentum, what's the inclination, what's the difference between the previous top to the next, because this is what will give us the insight to where is price going, what is happening to the price. And by watching this, I'm seeing that the retailers, they don't notice this actually. Like, I know that they don't notice it because I was also a retailer like back in 2017, 18, 19, and I remember not paying attention to these things. Like, it's completely normal. But now taking all this knowledge from Forex into crypto, like, I do see that, for example, retailers, when price is here at 45k and they see it going to 62, like, this is a 17k difference. This is a 17k increase. So they will be expecting it to go and shoot until 70k, until 80k. But if price retraces and comes back to 50k, they'll be like, oh, this is just a retrace to 50k. And then prices go to 65. And this is only a 10k increase now. So we are going from 20k, almost 30k push here, to a 17k push, to a 10k push, and people are just saying, oh, this will go to the moon, this will go to the moon. Each time it goes from one high to the other. Like, 5% increase from a top to another is not telling me that the momentum of the bullish or the buying pressure is still on, because I'm getting the feel that the sellers are starting to be in control around this area, around this zone. And if you mark a box from the first high until the next one, like, I can easily say that this was a easy distribution zone. Why? Because we had the accumulation all the way from down here, and the institutions accumulated everything they wanted at these levels. Sorry guys. The institutions accumulated everything they wanted at these levels. So just imagine if you put 1 million here and you come over here, like, you have 20 times that, so you have 20 million to sell. So the selling pressure will be way bigger than the buying pressure, just based on this accumulation and distribution factors. And once you put this into this perspective, once you see that maybe we had this push so they could double their money, then we made this push so they can continue the retail way of thinking that we are going to the moon. And like, we first sell, and then we come into this zone and we sell again, and we come into this zone and we break structure, and we come here again. And people are still thinking, after we break the structure over here, after we break this low, people are still thinking that this will go to the moon. But they don't see that probably the institutions, now that they doubled or tripled their investment, like, they're not looking to hold, they're just looking to make money and profit for their balance sheets. They don't care a single dime about Bitcoin or crypto, you know? They just want to make money and put profits into their clients' portfolios. That's it. So once we see that this zone is once, twice, 3 times, 4 times being completely rejected, and like, after every time we touch between 58k and 65, like, we get complete rejections, like it's normal that we might think that this selling pressure is to keep on going. And what we saw was a complete like crush of the retail market. So going into the weekly again, like I do see and I do recognize that from 13k from this first push, we took like 210 days 210 days to like decide, okay, we are stopping the bullish momentum and we will reverse. And if you think not only from these 210 days but from where price is now, like price was over here and it took 105 days to reach the highs. So if we think on reverse, it took, instead of 105 days, it took 70 days to get back to the same level. So it's a 1 month less. So the momentum is way stronger to the downside than to the upside. So if we were to say that from there to there, or from, for example, if we want to go from 20k to the highs, it was 120 days. So just think about it, how price can reach 20k in 100 days, let's say. 100 days, it's still possible. The momentum is still there. We didn't have a retest of the 20k area. The logarithm chart, as I already posted a breakdown out of this in the crypto section, like the log chart is clearly stating that this must come to 20k or even to 12k, because this is the only way for us to shake out all the retail thinking, all the retail money and hopes of Moon, and only then we can, like, this can take months to happen. This can take until the end of the year, just based on people's expectations of like how fast they can make money out of this, basically. And this is not the only reasoning. I'm pointing the charts to this zone. If we take the reasoning, like I know the retails, they only look at the price, they only look at the percentages, they only look at how much money they have on their portfolio, and this is how they will create their decisions into the market. But for me, my clear reasoning to be stating this into crypto, these values that you saw me posting on Insta, and I think it was yesterday also on the chat, the reasoning I'm stating 12k and $450 on Ethereum, 12k on Bitcoin, 0.30 on Ripple, like all of this has a reasoning. What is it? Like, if you think about it, why did cryptocurrencies boom from last year? Why? Where was the bottom of this? This was exactly in the moment the pandemic started. So if we got the momentum for crypto out of the pandemic, if we got the breakouts out of the feeling that the dollar was collapsing, the economy was collapsing, we needed stimulus checks, and all these stimulus checks went into crypto from America, like this gave a boost to crypto. So once we start recovering the economy, once we start getting a feel that things are getting back to normal, it's quite reasonable to think that prices can come back to pre-pandemic levels, the same way that it happened with gold. So where were we with gold pre-pandemic levels? I think we were around 1600s, or last year. Let me check quickly. Yeah, pre-pandemic levels, 1500. So it's really normal that if like price rose because of the uncertainty in the markets, because we didn't know what was happening, but as soon as something like started give us reasoning, and here was the vaccine starting to have some tests and vaccines starting to roll out, like this gives the sentiment for things to recover. But of course, if we technical wise will reject, like we did here, 1900, and if after we reject 1900 the Fed comes and speaks all this hawkish sentiment into the dollar and takes all these measures to implement into the economy, of course we will have like a recovery of the dollar and the weakness or the money flowing out of the safe havens and these currencies into the dollar, back into the dollar. Because if we had a tool pre-pandemic, now if things are getting back to normal, we need to take prices into these levels again, sort of, more or less. So taking this all into consideration, yes, I do feel that gold might come even lower with this opening of economies, with this recovery, with this vaccination rollouts. But I still have in mind that it's quite possible that we have a third lockdown into the end of this year. Quite possible. So I do still keep a scenario where gold is not still at pre-pandemic levels at 1500s, but it's still on a level where investors are saying, okay, we are prepared if things are uncertain, and if the dollar gets strength, okay, when if things are going well for the economy worldwide, of course we can come lower and retest this 1680 levels that we had in March and see if we can hold that. If not, if we do get uncertainty in the markets and in this recovery and on the recovery of these economies, I do see gold ending the year above 2000, for example, above 2100. Just based on this third lockdown, uncertainty in the markets, money flowing back into safe havens because we are approaching the end of the year, and it's normal that investors want to have their money safe in a place that they know that they can keep their money, or they won't lose as much as holding dollars, for example. Um, as some of you might not know, like this can be really good news for the dollar, but this is just short-lived. This is short-term goals. I'm not saying that the dollar will rise until the end of this decade or until 2025, because we still have a lot to go through. If you think what happened in terms of the dollar since the pandemic started, the dollar just, like, their debt increased so fucking, I'm sorry for the words, increased so much that we, like, I think they are projecting 50 trillion in debt by the end of next year. So having this all in mind, like, we need to take things really slowly. We need to feel the market. We need to know where are each thing going, so we can feel if the risk is on, if the risk is off, where are investors putting their money or taking their money from, and how will this affect every other currency that we are seeing. Let me take the log chart out, like, just now to quickly showcase what I was saying. Same happens with Ethereum. Like, we took 170 days to reach the highs, and now we are taking like 40 days to be in these levels. Like, things are really moving fast, so I need you guys to take this into consideration. Like, it's not only going up, it's also going down. We have, like, as a trader, we need to be aware and react and adapt to everything that we are seeing. Not only, like, make our decisions just based on the emotion of wanting some quick buck or wanting to make thousands and thousands out of a single trade. No, our job is to really take things consistently, to take things bit by bit, trade by trade, setup by setup, following our rules, following our discipline. And for example, now that we are approaching the end of June, we don't need to rush into anything. We just need to see how things are rolling, how things will close for the weekly, well, how things will close for the monthly, how things will close for the 3-month candle, like how things will close for the 6-month candle. How is the yearly candle? Like, we need to see all of this. Like, we need to take all of this into consideration. If you think that the 6-month candle and the yearly candle are like creating a 30k, a 30,000 wick, like, just this wick is bigger than the range Bitcoin was at, like, since the beginning for over 10 years. So it's quite crazy the amount of money that this thing is moving. And we can't just put that aside, that it is a possibility that this comes down. It is a possibility, like, we might go up to 100k, to 500k long term, but it's normal that the price will always shake out the weekends of the market. Like, only the patient ones, only the ones that realize these details will have the will to make money, to protect their money. Like, as soon as I started seeing these 3 pins farming, I told everyone in the group to take their money out of crypto and then to wait for a 60-70% retracement. It's normal these things to happen. It's normal for people to get trapped into these candles and thinking, oh, it's now that we are going above 42. No, it's not. Like, all of this happens for a reason. All of this, it's, if things were easy, like, everyone would make money, but 90% of traders lose money, so we need to think the complete opposite to them. Okay, we need to put ourselves way ahead of the game to be like 48 hours 24 hours ahead of price action, and all these things will give us little insights. And the institutions, of course, we see this way better in Forex. The institutions are always leaving clues. They are always leaving things for us to keep on tracing to make up our decisions. So it's quite normal if we don't take a trade on Monday. It's quite normal if we don't take a trade on Tuesday. It's quite normal if we are just waiting for price to tell us what does he want to do. Okay, if for example now we would see GU come here to this level that it just broke into New York session, and we would see some sort of reversal on the lower time frames, of course we could take a long into 39. Like, not a problem, protecting ourselves with 15-20 pip SL. Like, we go with the flow. We this is not an exact science, and you guys really need to get in the rhythm of this group. I mean, I know I'm always posting things in different charts, but I really want to change things into the next half a year. And I really appreciate you all guys for watching this video until the end. Like, I'm gonna cut it now. I really have a lot of things prepared for the second half of this year, and I really hope I can help a lot of you guys, like, take your next step into leveling up your trading journey. Into, even if I don't help, man, help each other, guys. This is a community. Like, just use this chat, just use the live trading room, just support each other, grow with each other. Just let's take this to a whole new level, because I when I started trading, like, man, this is crazy how the communities work, how people are so selfish, how people are so just focused on themselves, you know, and they don't see the potential that we can have as a community. For example, if one is trading GBP USD and he masters it, if one is trading gold, if one is trading crypto, if one is trading index, like, we create a huge community of with individuals, like motivated individuals with like entrepreneur mindset, like this will to have more and more and to learn more. Like, we will tackle each and every side of the market, and we will have way better results than if it's just me here telling you, hey guys, this is what I think about this. Like, I need you guys to have some sort of base knowledge in order to follow also what I do, because I know, I mean, like, the things work for me and the guys that have been following me. Like, this group had 25-30 members. These guys that have been following me for over a year, for over half a year, they already are used to how I post, how I go into finding the setups, how the structure is supposed to play out, what am I looking for the confluences to keep the setup valid. Like, all of these things, they don't come easy. Like, that's why I say work hard, study, like, and go over the trading journal. Like, if you have any question, just send me a DM. Like, I'm here to help, guys. So I will cut the video now. I hope it helped somehow clarify some things. Probably in the middle of the week I will leave another video with an update, probably shorter one. And yeah, guys, I hope you all have a great week. Trade safe, or don't even trade, because if you are happy with your profits, just enjoy this end of the month and start preparing the next half a year. And yeah, guys, take care, and I'll see you in the next video.